Bitcoin rallying a little bit today. So again, if we flip over and see, you can see Bitcoin after yesterday's pullback is pushing up today. Bitcoin now remains basically between this double top at 109, 109,000, and this now support. Remember, this was resistance, 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 breakout, and confirmation. So if it comes back in, this should act as a short-term support level. If it goes up here, I'll add to my short, which I'm basically flattish on, slightly out of the money on. And then I would add up here, which is our bigger upsloping trend line that goes back a long, long way, which is right around 113, 112 area. But right now, again, Bitcoin, it's had a great move. It looks like it's starting to consolidate, kind of doing what it did over here. It's now starting to do that. So you can see big move, consolidation, big move, and it's consolidating again. That's very normal. The way I look at consolidation, folks, after a big move, think about a marathon runner, right? I always like to put things in terms that I understand. Hopefully it helps you guys understand as well. You know, if you run a marathon, and I don't run marathons, let's be fair, I don't run marathons, but I have friends that do. You know, if I said to them, hey, you just ran a marathon, now go run another one without any break, they'd be like, dude, you're crazy. And they might even be hazardous to their health. What do they need to do? They need to rest. They need to eat. They need to recover. They need to take it easy. They essentially need to consolidate and rejuvenate before they can make that next move. And that's what bullish consolidation is. Same thing on the bearish side, right? A big move down, and then you consolidate, you kind of take a break, and then you can make your next move to the downside. So that's essentially what consolidation is on a simplistic basis.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway breaks down crypto trends and Bitcoin's next big move. Stay tuned to see where the charts say we're headed.
The 10-year yield, again, I normally don't go over this day after day, but I've been going over it because it's such an important chart. Yesterday, again, we saw further upside in yields, almost back to this previous high where the markets were really freaking out, right? Where we saw, again, yields going up while the market was collapsing. Now, again, after the CPI data, if we flip over to the 10-year yield, you can see that the CPI data has brought the 10-year in just a little bit on the intraday, which makes sense because if we're seeing lower inflation, it gives the ability to the Fed to maybe cut rates a little bit more aggressively, assuming we don't see an uptick in inflation, right? So if inflation is lower, it allows more stimulus, aka rate cuts, or spending or stimulus from the Federal Reserve or even the government. And again, that is bringing in yields just a smidge today. But I'm still on alert. I think if we ever hit this high, because the market has deja vu in terms of, or kind of PTSD in the terms of, remember when yields were up here, what the markets did. I think if we come up to about the 4.6% level on the 10-year yield, you would probably at that point see the markets get a little bit nervous.
Bitcoin is entering new territory as long-term holders tighten their grip on the supply. A record-breaking 14 million BTC are now considered illiquid, meaning they're sitting in wallets that rarely, if ever, spend their coins. This milestone shows growing conviction among Bitcoin investors, especially as prices hold above the $100,000 mark. According to on-chain data from Glassnode, the past 30 days saw a 180,000 BTC jump in illiquid supply, its biggest spike since December 2022, just after the last bear market bottom. This trend reflects a shift in how Bitcoin is being treated, less as a trading asset and more like a store of value. Investors are locking up their coins, betting on future appreciation rather than short-term profits. Illiquid entities, by definition, don't move their BTC much, and that behavior is signaling confidence in the market's long-term trajectory. What's even more striking is the continued buying from whales. Those holding between 10 and 10,000 BTC data from Sandman shows these big players have added over 83,000 BTC in the past month alone. While retail traders seem cautious, institutions and large holders are quietly stacking. With demand climbing and supply tightening, Bitcoin's setup looks stronger than ever as this bull market gains momentum.
Coinbase. Let's talk Coinbase here, guys. This stock is making an impressive move. It was announced yesterday after hours that they would be joining the S&P 500. I believe next Monday, I think they're being added to the S&P 500. And remember, when a company is added to the S&P 500, everyone always asks me, well, why just being added to an index does price automatically go up? So essentially what ends up happening is you have funds that basically like ETFs, right? We all know ETFs. And there's ETFs that track the S&P 500. And so those funds or those ETFs, they must hold every stock in their fund to equal out what the S&P 500 does, right? So essentially you get to mimic the S&P that way. So if a company is added to the S&P, there's a bunch of funds or ETFs that then have to buy the stock. Now, is that happening at this point? The answer is probably not, but retail investors and funds are privy to this information. And they know that in general, that pushes a stock up. So they're front running essentially that ad of the S&P 500. And that's why Coinbase is rallying this morning so sharply. So Coinbase is up almost 10% here on the back of this. I do have a very key level I'm going to be watching to short. You can see it on my chart already. This level right up here is a very, very key level on Coinbase. Okay, it's right around the 245-ish area. Now, you can see pre-market, we're trading right here. So we're not that far away from that level. Now, you might say, well, why is that a good level? Well, remember, former support hits, bounces, and then finally breaks down. Former support now becomes resistance. Now, that's just one factor. And remember, as a technician of the charts, we generally like to take multi-factor trades, not just one factor. Listen, one factor gets you about 60% odds, which is not horrible.
Bitcoin surprised investors with a sharp dip just after reaching a 3-month high of $105,720, falling to around $102,000. This unexpected sell-off came right after former President Donald Trump announced a U.S.-China tariff truce, an agreement that boosted stock markets but left Bitcoin lagging. While many saw the trade deal as positive economic news, it led to a shift in investor sentiment away from safe haven assets like Bitcoin and gold, and toward risk-on assets like equities. The deal, which eases tariffs and opens the door to extended negotiations, boosted confidence in traditional markets. As a result, Bitcoin, which had gained 24% over the past month, lost steam. Gold also dropped 3.4%, signaling that investors were moving away from assets typically favored in uncertain times. Bitcoin's high 83% correlation with the stock market adds to the complexity. When stocks rise sharply, Bitcoin can sometimes be sidelined, especially after a strong rally. Meanwhile, concerns about market concentration are rising. With Strategy and BlackRock holding over 1.19 million BTC, some fear too much price influence is in the hands of a few. Yet strong institutional inflows into Bitcoin ETF, $2 billion between May 1 and May 9, suggests that the current dip may be a pause, not a reversal. For now, Bitcoin's fate seems tied more to macroeconomic wins than crypto-specific headlines. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.